Good morning, everybody, and welcome to Doc's Option Gelt Daily SPX Daily Plan. I'm Doc, and I'm going to show you my plan. And for a complete daily plan roadmap for SPX and other measures of volatility and things that are going to move the indices more so, but individual names as well. Please subscribe to the Substack, and the link should be below while I get my chart up. And let's begin. Okay. Now, we'll get to in more detail to the whole Iran conflict in a moment. Just a quick recap of Friday, which seems like ancient history right now. On Friday, we weren't able to kind of hold that. When was it? On Thursday, we kind of broke back up above 6,900. On Friday, we weren't able to hold it. The index closed down. Volatility, tails were bid again. What that means is that market participants, hedge funds, whatever, guys like me, maybe, definitely guys like Truey, were smart enough to maybe buy protection into the weekend, or smart enough to sell overpriced protection. The jury is still out. But the price of puts was way above the price of calls. That's called skew in the 98th percentile, 95th percentile, depending on which measure you want to look at. Now, this was obviously well anticipated, not a big shock to anybody that it was going to happen, not a big shock to people that it's probably going to happen this weekend. And so the market was somewhat prepared for it. And we'll get a little bit more into that in detail a little later on. And so Sunday night session, Globex session open, gap down to right around 6,800, round number, inflection point for today. Keep your eye on that number. Easy one to remember. And after kind of bouncing off of there, we pulled back, retested, and went up more like towards 6,850 almost. Then overnight session, things weakened. We bottomed out right near 6,750, the round number 6,760. Market makers do have to hedge this stuff overnight. The hedging is not as precise, let's say. Volatility markets opened. I'm going to look at volatility in a minute. And long story short, we're kind of struggling in this main zone, 6,800 to 6,820. Let's get to my daily plan, which you can get the complimentary version if you subscribe to the Substack below, and the premium version behind the paywall, etc. Also, the link should be below. Okay, so Friday was repositioning, except we have this Iran thing. So rotation, we had the same rotation again. Tech and financials bled, while healthcare staples, etc., were green. It's the same value rotation, safety rotation. PPI, all that other stuff, we're not going to really go over that. Let's talk about the VIX. VIX was up about 6%. We're going to get to the VIX decomposition index in a minute. And it occurred to me that some people that are listening might not know what the VIX decomposition index is and why they should even care about it. So I'll give a brief, I'm going to touch on that briefly now, and then we'll come back around to it. I wrote a little definition in here somewhere, a little description somewhere. So this is what's behind the paywall. Okay. I think I put it here somewhere. Maybe I didn't. Okay, well, VIX decomposition index. VIX gives you one global number, 6%, VIX 19, whatever, 20, whatever it is. The VIX decomposition index breaks it down into different pieces, what parts of the VIX moved, what parts of the volatility surface shifted, so you can just get a better feel for what actually happened under the hood. We'll put it like that. And so on Friday, where was I? Let's get back up here. Yes, on Friday, the VIX was up about 6%. And I have it down the note, but if my memory serves me well, that was mostly, it was actually sticky strike shift. The whole surface shifted because the market went down, so everything's going to shift in that direction. Parallel strike shifted. What that means is that people were reaching for that the same strike. It was also reaching, it was repriced higher, volatility was repriced higher, downside skew was bid, out of the money options were bid. So long story short, people were reaching for protection over the weekend, expecting this to happen. So now the question is, do those overpriced options pay or not today and out to the end of the week? And if they do, when do the people take profit? If you bought a 6,800 put on Friday for X and now it's 3X, 4X, are you going to hold it as a souvenir and take a picture, or are you going to sell it? And so when does that happen, and how do market participants trade this is going to have a lot to do with how we end up today. We also have puts that were bought out in the chain that will either realize, sending us down further, or will decay, allowing us to drift back up. And over the course of the last few weeks, we've had a lot of these as I'm sure most of you remember, we've had a lot of these big drops down, big bounces up, and that's all that volatility. It's harder to use your lines on the chart when you get these price voids, up, gap down. A lot of that's volatility, repricing, pricing up, pricing down, etc. Okay. Now I'm gonna, I don't know if, did you text Vol Trader? Yeah, okay.
I did, yeah.
Okay. So let me get to my note to keep me somewhat structured. Okay, yeah. So weekend, we know U.S.-Israeli action. Like I said, for weeks, the VIX 9-day is outperforming the VIX on a percentage basis. I've been posting it all over the place. So if VIX is up 8%, VIX 9-day is up 15%, has been typically. I'm just using that as an example. VIX 9-day is telling us the demand for near-term hedging versus VIX, which is 30 days out. So people are more worried about the short term. They're worried about NVIDIA. They're worried, now that's out of the way. They're worried about they're worried about NVIDIA. They're worried about, what else are they worried about? And now they're worried about Iran, and plus whatever inflation stuff, which seems to kind of be somewhat in the back seat, although they did react to the PPI, it seemed, on Friday. And we have NFP coming up this Friday. So there's still that vol that's going to stay in the chain. So it's going to be hard to get a clear out or a reset of volatility. What I like to teach you, as a matter of fact, we have a mentorship program. I'm glad you asked. We have a mentorship program that goes from soup to nuts. What is it called? What is a put? What is an option? What is volatility? What is VIX, etc. All the way through market maker hedging response, as well as second and third order, well, second order Greeks. We're not going to bother with the third order Greeks. Gamma, charm, and Van, and how those influence market maker hedging. And forget market maker hedging, you have to understand that for your own options positions. And if you're not a SPX option trader, if you're an E-mini scalper or by SPY or whatever it is, market makers still have to hedge at those levels. There's still reactions there. So knowing where those levels are is going to just help you sharpen your pestle. I'm not saying abandon what you've been using, and most people here have been using something before they stumbled upon me or on Gamma. How to incorporate market maker Gamma levels and options positioning and market flow into what you're already doing. So if that sounds interesting, we have a beta course. I'm launching a beta mentorship program, accelerator course. I haven't come up with an official name yet. Starting March 15th, $4.99 for existing subscribers. We now have a special $9.99 if you're not an existing subscriber. For $9.99, you get a year of Doc's Options Gelt, which has all my daily roadmap as well as other premium content I wrote. You get access to the Discord community, and you get the course all for $9.99, which I think is a bargain. I really do. So anyway, so thank you for asking. Yeah. What does he say? I am from India, trading options for the last 5 years. Great. I think it would probably be helpful for you. And Bad Hombre is going to put the link in the chat, or tell us where the link is.
The link is in the YouTube description, guys.
The link is in the YouTube description, and the new link too with the $9.99.
It is.
It is. Okay, great. Thank you so much. Okay, the other thing, there's just a lot going on, so we're gonna contain shock, vol exhales, drift, levels rise, open-ended escalation, turn structure stays stressed, reflexive selling stays on deck. And so it's kind of, that's why we're gonna have to watch volatility. What we're gonna also have to watch, you don't have to do anything. What I'm gonna watch is I'm gonna watch OVX for oil volatility, GVX for gold volatility, gold being that safe haven risk-off asset. Look at the 10-year treasury. Now it's back above 4. It was below 4%, TNX, which is kind of the safety bid. How nervous are people really? How nervous are people really? Oil topped out at 75 when we opened. It was 71, 72. So there's profit taking. Now Iran is blowing stuff up, in Saudi Arabia or whatever they're doing. They're kind of attacking people in the region. So how the oil trade goes is going to be a default measure of how scared the market is. Oil, volatility, etc. Oil volatility, gold, all those kind of assets. So it's going to be one of those days or one of those weeks or one of those months where you're going to have to keep your head on a swivel. Okay, so let's talk about volatility real quick, and then we're going to look at a gamma chart. Okay. So here's the VIX and the VIX 9-day. What I want you to see here, and the VIX 9-day doesn't start printing until the market opens. And so we can't really tell anything from this. But what I just want you to notice, and let's go back to, let's just pick a random day here. The VIX was 21.47, and on that same day, well, let's go over here. I don't know if you can see the lines. The VIX 9-day and the VIX have been almost equal. Now, the VIX 9-day typically is 2 points below the VIX, so that's indicating short-term stress, short-term hedging. We want to see short-term stress go down if you're a bull, or up if you're a bear, or use it as a signal whichever way you go. So watching the VIX 9-day and how it moves in relation to the VIX, the 30-day, is going to give us a clue as to how market participants are positioning. Now, if you're a vol trader and you have skew on your dashboard that you made yourself, where you could see skew of individual strikes intraday, cool. I don't have that. I mean, I guess Val could help me out with that, but I just glance at my dashboard that has that stuff on it. The other thing, and we've been seeing this again and again, and I've been pointing it out, VIX this VIX is going to settle out the March contract into this number. So VIX over 23 with the VIX futures at 21.75, that's just plain wrong, so to speak. So I'm calling bullshit on VIX 23. It's going to come in toward the VIX futures. Now, that doesn't mean it has to come to here, because the VIX futures were 22.6 overnight. The VIX futures can come up to meet it, and the VIX can come down. But the VIX futures are your gold standard to compare. So you don't have to do anything. It's looking at these multiple measures of volatility that will give us a better flavor for what's going on within the options market, which will then spill over to market makers hedging. Okay. Let's get granular here. So this is options depth, and I believe there's a discount link somewhere.
There is in the YouTube description.
Okay, in the YouTube description. And one of the founders will be doing we're going to be doing a webinar of some sort. We're going to be doing one for the beta version where you get to ask them questions and things like that. And we'll also be doing something public. And so that's like a little added bonus. Oh, and we're working on having a bot in my Discord. They'll have some of these levels, not all of it every day, but to have some kind of, so you'll at least be able to see it, to see a snapshot at the beginning of the day, to have something to use. And so that's kind of thrown in. It's like the deal. So where are we now? So right now we're around 68.10, 68.25. And the first thing that catches the eye is the preponderance of strikes to the left. Strikes to the left means market makers are short options there, short gamma there. And without going into all the theory of what's going on, that means they're going to hedge in the direction of the move. We're going to get whippy price action up and down, back and forth, potentially between 68.25 and 68.65 or 68.45. And the bars to the right, where the market makers are long, are kind of like shock absorbers. So we have a zone from 6,800 to 6,865, broadly framing price movement if we're over 6,800. Below 6,800, we have a box, a zone, 6,800 to 6,775, a nice 25-point round number box with choppy movement in there. And then below 67.75, there's not much to save you, down to 67.50. Round numbers. So round numbers are kind of ruling the day. And I spoke about it a little bit in my daily note. And part of the reason is there's not a lot of volume here, not a lot of open interest here. And so a lot of the influence from the large March quarterly expiration is going to bleed into market makers' hedging requirements today. And those tend to be around the round numbers, the quarter strikes, and then the century strikes deliver more numbers, even more so, etc. A quick look at Periscope, which is unusual Wales version. And here's the entire chain, gamma positioning. And again, to the left is where market makers are short. And what we see is a lot of red bars here. And so price goes in this direction. 6,800, the largest red gamma strike on the board. 6,700, there's a lot there. Now at 6,700, again, could be a magnet. Should we break down? Whatever, today, next week, whatever. Or that provides nice, lovely charm decay, nice, lovely fuel to push us up, or at least keep us over maybe this number, 6,800. And if we're over 6,800, we could get decay fuel keeping us up over 6,850, et cetera, et cetera. Or we get slammed down, we're buried underneath it, but it goes both ways, and we can't get over those levels. That's the broad roadmap for where we are. Val, who wants to go next? We got Chewy, we got Vol Trader that have stuff.
I'm ready if Vol's not.
Okay, go ahead.
All right, let me pull up my chart. Can everyone see my screen? Yep. All right. So let's break down the range first. I got 68.48 down to 68.70 or 67.70. What I'm seeing here today, guys, is a little bit of chop. We're between my pivot and two sticky levels here. Curious to see if we can hold above pivot and then go into our rejection zone for a possible slight rejection. I'm a little bit more excited to reject around 68.80. Should VIX come down and break the 22 level? Because I think if we break 22, we'll see 20 relatively quickly, which would give me the confidence to hold the upside trade to either of my higher rejection zones. Big key is this first one. If we're holding that 24, then I think obviously we'll come down to our sticky levels and then potentially even back to our floor. If we break our floor down here, I'm looking for 67.45 as a no-brainer trade. And obviously we should see the VIX holding 24, maybe even 25. I think downside is a little less likely today, simply because I see so many open interest at 20.5 and 20 on the VIX. So if that maintains, I think the upside path is cleaner.
So cautiously bullish.
Cautiously bullish, yep.
And I, just for fun, ran a little poll on Twitter over the weekend, and the FinTwit world voted 2 to 3 for a green day today. So interesting how things play out.
I mean, I do think that the drop was pretty nicely caught, and I think that we should tell if that was priced in for the most part. That's how I read it. So we'll see if that read is correct.
Okay. Val, you ready for us? Oh, let me put him on the stage.
Yeah, I think I am.
Well, then we're ready for you.
Yeah, I'm sharing the screen. Okay. So, um, so first of all, carrying some notes from Friday. I don't know if you guys remember or not, but my main level was 6850. I said that if we were to hold that, we go up to 6900, 6920. I think we traded 6890 eventually and closed at that level. And we also saw the skew moving from complacency February 26 to fear February 27. And we still see some of it today, but considering the fact that everything happened over the weekend, I mean, I'm pretty surprised that nothing happened, right? I mean, we gapped down 0.75% on the Globex, and then went down all the way to 1.5% and bounced back up. So it seems that the market is pretty split between those that will panic probably at the open and those that say the dominance of the US is like to the moon, right? So unless the US shoots itself, or I don't know, Iran does something very, very stupid, like hit a ship, one of those warships. Other than that, the market is not really convinced that anything will happen here, other than the fact that Trump does what he says. It just takes over the country, changes the individuals there, or make their life very, very miserable. So it doesn't. It seems like the market is pretty content with the current levels as a floor. We still need to see the open, right? The opening is like where you get all the flush and all the panic and all the stuff, but pre-market, pretty resilient, I must say. So that said, 6850 remains a key level, and for today as well, we're trading under it. So we still need to reclaim levels close to it. Let me shut this down for a second. Um, okay, so let's start here with the plain vanilla open interest. We just look at how the open interest layout is, and what I'm seeing is clearly put dominant all the way up to 6900, and this suggests that the market will find it very hard to climb up and stay there. Specifically, up to 6875 SPX, yeah, that could be, but that will be like a significant, like a massive, massive resistance and rejection level. So the market might do that to do some unwinding of volatility, but only if real buyers or some type of final something like very clear from the administration over the Iran thing, only those can push through the 6875. Otherwise, that will be the high of the day if we reach there, and we'll get to that soon. Now, how do I split the levels? I see basically transition. So let's jump for a second to the end, but we go back to the models. So transition, I mean, there's this zone 6830 to 6850. This zone here, this will be our morning resistance level. If we go through transition, then the upside potential is there with all the 31 resistance levels 10, 20 points just above. So I doubt it could do much without something significant from the Iran thing. But either way, above 6850, I tend to be bullish in terms of the implied trend. And under 6830, I tend to be bearish back to the lows of Globex. The my expected moves are calculated however I do it, and they're plotted here. So they're pretty large, considering, right, relative to what we saw lately. So it's like I think it's 70 points on the 0 DT and almost 100 points on the +1 DT. So those are very large and will act as mean reverting just because of the sheer size of them. So again, under 68.30, we go down. Above 68.50, we try to go up, but without some clear views from the administration, I doubt we push to 68.75.80. Now, I'll break it down through the models and show why I think all this. So looking at the skew, we see a clear classic, war kind of skew. There's no trough. It's all put skew, right? There's no trough. It just goes from right to left, going up in an incline, pretty symmetrical and monotonic, just like it should be in times like these. That said, they're barely downside volatility trades that I captured. So that's kind of strange. Like they're almost non-existing. There's no red bars clustered like the green bars. So this does show some type of, local floor, maybe some preemptive speculation, maybe a bit of complacency, call it whatever you want. These red bars are totally missing here. Generally, we see them. So in a day like this, I would expect them. On the other hand, starting from 68.40, we can clearly see a lot of positions that I deem as significant towards bullishness, and we can see they're very neatly tied and come over, every strike, what you don't see on the put side. Now, the main hurdle, as I said before, in my eyes, 68.75, I doubt we'll go through that without some type of, positive, whatever input information, short squeeze, I don't know. I doubt we go through that. But if we do, then we push, reclaim, and, we get continuation the next day. Otherwise, the market, if it's able to go through 68.30, 50, it goes 75.80 and then drops back down, does a mean reverting type of dynamic. That's how I see today. Looking at this model, the candy bar still closed to the upside, open to the downside, like I showed for the last, I think, 10 trading days. Just a quick recall. It basically shows you the potential or how easy it is for the market to go up and hold those levels versus how easy is it to go down and hold those levels. So if it's opened, all the bands are open, it means that if the market goes down, it can close at the low of the day and continue easily into the Globex and the next day. Whereas if it pushes into this squeeze, then what happens is that if it holds that level, that's a nice short signal into the Globex because it's unstable there and should not be there by the end of the day. Now the mean reversion model, which is I think the most significant one, is again a bit contradicting to the wartime because it's all positive, like it was on February 27. Now, if you recall, Friday, the market was a bit bearish, and it didn't do too much of a trend to the upside, but again, it closed at the high of the day. So it tried to went down to go down, but eventually rotated and closed at the high of the day. So that dynamic is here. This model shows that dynamic we saw on Friday will be today. There's a lot of tendency of selling volatility on any spike. This is what the red line shows, being positive to the downside. And this means that from a market perspective, unless they get really spooked, you give them a bit juice in the vault, they'll come in and sell and try to create those local floors and mean revert the market back to 6,800, 6,830. Finally, with the chart, what I started with, again, to finalize this, so through the models, I see these levels repeating themselves, the 68.30.50 being the transition, the 68.75 being the most significant in the money to the upside, this red bar here, which is the only red bar above spot. So that makes it very significant in my eyes. And that would be the real hurdle if we even push there. So anyone holding a position intraday into this level, if you have sufficient information or a feel or whatever that the market is going to blow up, then good. Otherwise, it's a good level to trim. take some profits. If we hit that, I would expect that not to be breached that easily unless Iran surrenders in an hour, and and you get a huge vol crush, and we just go up today and tomorrow. That's pretty much it.
Okay, thanks.
Sure.
Let's go back and see what's going on. And really, we're just kind of running in place, like Val said, until the morning open, market on open trades clear up, and people who are panicky finish panicking, and people who had positions open do what they're going to do. We saw just real quick, and it's going to show you. So, for example, I bought some VIX call ratio spreads on Friday. I'm closing them at the open. I'm going to look to short VXX or some kind of short vol trades. Maybe not at the open, but right now I'm looking there. Not investment advice, just FYI. Do I follow my boy Z? I structure my trades somewhat like him. I change them a little bit to suit my trading style. But what we do see, or what I noticed, as soon as the market opened yesterday, oil spiked to 75, which was kind of targeted. If you look in the chain, that was not a big surprise. Now, oil has come down. We just had a headline at, 7 o'clock or something, that Saudi Arabia, something, oil fields, whatever, something was blown up, attacked by Iran. Seems to me now, I used to be a virologist, and I was an economist, and I was a constitutional law scholar, and now I'm a military expert. It seems that you're supposed to laugh. It seems that the strategy might have been kind of a doomsday strategy, that we attack all our neighbors, put pressure on the U.S. to stabilize the oil market and to cut this crap out. However, it seems to have backfired, because that unknown caller was somebody telling me that my loan has been approved. I get about 15 of them a day. Not that I've asked for a loan. And so that's telling me that, the oil market, this has kind of all been priced in. So we have to look at oil skew, or, the VIX of oil, OVX. I'm not sure if I have it on here. I thought I had it on my watch list. Let's see. If not, we can add it, right? Right. Let's add OVX. We can all look at it together. That's the volatility of oil. Okay. Let's take a look at how that's looking. Okay, so even though oil came down a little bit from the 75, oil vol is still kind of going nuts. So I'd like to see that kind of give me an indication that some of the nervousness is coming out. You see, it's still ramping. Now, it can ramp both ways. Volatility is, in oil, the volatility is directional up. In commodities, and I'll trader could tell you probably more about this than I can. In commodities, the skew is toward the call side. Let's take a look at gold volatility. I think that's GVX, right? No. What's the gold volatility symbol? Anybody know offhand? Okay, well, I'll dig it up. What was GVX? It's VCVX, maybe? Who knows? Come on, I got some smart guys here watching. No.
It's GVZ. GVZ.
Ah, there you go. That was the trick. was the trick. GVZ. I wonder why Z in the naming conventions. G. Did I add it here? You guys get to watch real time, huh? GVZ. Here we go. I thought I had it on my watch list too. It came off. Let's take a look at gold. Now, gold volatility is coming down. So again, gold is the safe haven asset. So I'd like to see clear signals of gold vol come down, oil vol come down, the VIX and the VIX futures normalize, the VIX 9-day flatten out compared to the VIX. I'd like to see some of that balance itself out to be able to take a larger size bullish trade more than a daily, a scalp, or a couple week, a swing more than a few days or a week. So doesn't mean I'm going to get that signal. I might have to just decide when how I want to trade it. But yeah, so that's what I've been thinking about here. Anyone else have any final thoughts? Let's get see. So we're still kind of hanging around 6,800 pivot. And that's what to watch today. One last thing, and then we're going to go. One of the things that Options App has is a feature that they call marker, as I say, put tails on it. And that shows us what positions have opened since the last update. And we see the main thing that's happened is 68.45.50. That's kind of closed, whatever was there. So now that's kind of adds a little bit of a lid there. And other than that, not much has changed. 67.50s, some have closed, probably profit taking. And if we look at depth view, just to see what else is in the chain further out in time. For Friday, 6,800, 8,000 puts are sitting there. So there's a lot of puts down here, 6,800, 67.75, out into the rest of the week. $68.25 for Wednesday. And remember, we have non-farm payroll on Friday, so even should things settle down, we would still expect volatility to remain elevated into that. So since volatility tends to be mean reverting, we're not worried. I'm not worried about an absolute level of volatility. Is it 16 or is it 20 or is it 22 or is it 15? I'm looking at volatility relative to itself recently. And speaking of volatility, just one last thing. I didn't get a chance to look at it, so you guys get to hang out and look at it with me. Now let's just put on. Let's see where the customers are positioned. And so 18 to 22. This is market maker short gamma. If we want to make it more intuitive, I guess go to customer side. That's you, me, and whoever else. I'll just look at the calls. Customers are long calls from 19 up to 22. Up to 20, you have this little ramp. Is kind of where we've been stalling out lately. Over 22, You have another 22, 23, 24 calls are sold, 25 calls are sold. Those are parts of flies. So just because you see on your unusual options platform, whatever, don't get it twisted. Oh, these are bought, excuse me. These are sold. I'm sorry. I'm looking on the wrong side. 23 and 27. These are sold. This looks like a spread, fly. 25, 27, 30. And so you got to kind of take all that into consideration. So your unusual platform is going to show you where the volume is. Then you need to figure out what was bought or what is sold. You can often do it intuitively. If not, subscribe to Option Death and you'll find out the actual answer. Okay, any closing questions, comments? I saw somebody had a comment about something in there. Oh, where is it? Hopefully 10-1 IC president doesn't roll early this morning, light positioning or roll around this area. So let me explain to you what he's talking about. So there's systematic trades that we track intraday, and the Wise Owl Valor Hoot utility helps us keep track of that. These are intraday trades tagged, so we know if customers bought them or sold them. And we have our friend, which side am I on here, market makers? We have our friends that sold, where are they? 67, 75. Now these 65s got eaten up. 66. Oh, these guys all the way down here. Right. Sold 5,000 of these. Now, sometimes when the going gets tough, they buy them back, even if they're pretty far out of the money, they'll roll them. We have 7,000 over here for Tuesday. Do they close this out and roll it? Buying 7,000 puts at 67.75, adding negative delta, pulling us down at least when the roll comes in. That's why you have to watch the flow to be in the know. And then we would kind of reverse after that or not. So that's something else to keep an eye on. And, you know, we talk about that in the room when we get it. And here's the other side of an iron condor for tomorrow, 6,900, a 5 wide. Sold 6,900, bought 6,905. And that's, you know, right now 6,900 is not looking very likely today or tomorrow, but you never know. Okay, I'm going to sign off now and decide how we want to trade this. Have a safe day.
Good luck, everyone.
I don't see any questions, so we're going to call it here.